Banking revolution, Citibank bet on stablecoin. Good morning, dear subscriber and guest. Together we will discover one of the biggest movements in the traditional banking system toward digital currencies. Citibank, yes, one of the largest financial institutions on the planet, has just confirmed that it is considering issuing its own stablecoin. What does this mean for the future of global payments? Is the traditional system surrendering to the inevitable? Stay tuned, because the final revelation could change the way you view digital money from now on. Jane Fraser, CEO of Citigroup, has publicly confirmed the bank is indeed exploring the issuance of its own stablecoin. But before launching its digital currency, the immediate focus is on so-called tokenized deposits. This type of solution is already being actively tested by several institutions and represents, according to Fraser herself, the next phase of digitalization in payments, liquidity, and corporate finance. Meanwhile, Citi is accelerating the development of solid digital infrastructures. Among them, the conversion of fiat currencies into crypto assets, the famous on-ramp and off-ramp, and also the secure custody of cryptocurrencies. In other words, they're not just studying, they're building the technological bridges to a new hybrid financial system. The stablecoin war. What's at stake goes far beyond a simple stablecoin project. We're talking about the direct participation of banks in the new digital ecosystem of stablecoins, until now dominated by startups and crypto companies. The most recent projection from Citi Research indicates that, by 2030, the stablecoin market could exceed $3.7 trillion. Most of this amount will be backed by the US dollar. And the most curious thing? Even Jamie Dimon, CEO of JP Morgan and one of the most public critics of cryptocurrencies, has already made statements in favor of financial institutions' involvement in stablecoins. It's the clearest sign that the tide has turned. Even skeptics are taking action. The legislative scenario in the US. But while the private sector is advancing, the public sector is trying to keep up. In the United States, regulators are trying to pass specific legislation to provide greater legal certainty for the stablecoin and digital asset market. The problem? Discussions have stalled in the House of Representatives, specifically within the so-called Liberty Caucus, a conservative group that resists the way the Senate has been conducting the process. Despite this, the movement has already gained too much momentum to be stopped. With or without immediate consensus, the American institutional machine is adjusting to the new monetary paradigm. What to expect in the future? 2025 is shaping up to be a watershed moment. While we see large banks like Citi creating infrastructure for stablecoins and digital deposits, on the other hand, we have a more mature crypto market, with more secure, interoperable, and efficient technologies. The combination of these two worlds will transform the way we make payments, international transfers, and even how we store our reserves. The paper era is coming to an end. The new era, that of regulated digital assets, is just beginning. I'm incredibly grateful you stuck around. You're part of a minority who are paying attention. While many still see stablecoins as a passing fad, you're already understanding that they will be the silent engine of the entire new digital economy. And here's a final piece of advice. Don't wait for the big banks to tell you what to do. Stay one step ahead. Keep up with the latest developments. Understand the technologies. And prepare for what's coming. If this content helped you, share it with someone who needs to be open to this new reality. See you in the next episode.